Hi everyone, this is a technical analysis on USDJPY. Let's start with some fundamental background first. The Fed left the interest rates unchanged as expected at the last meeting, with a shift in the statement that indicated the end of the tightening cycle. The summary of economic projections showed a downward revision to growth and core PC in 2024, while the unemployment rate was left unchanged. Moreover, the dot plot was revised to show three rate cuts in 2024, compared to just two in the last projection. Fetcher Powell didn't push back against the strong dovish pricing and even said that they are focused on not making the mistake of holding rates high for too long. The latest US CPI slightly beat expectations, but analysts expect the core PCE to print at 0.2%, again following the CPI data. The US PPI missed expectations across the board, supporting the disinflationary impulse. The labor market continues to soften, although initial claims keep on hovering around cycle lows, while continuing claims are ranging at a higher level. The latest ISM manufacturing PMI beat expectations, while the ISM services PMI missed by a big margin. The hawkish Fed members have been leaning on a more neutral side lately. The market expects the Fed to start cutting rates in March. In Japan, the BOJ kept its monetary policy unchanged as expected at the last meeting, with interest rates at negative 0.10% and the 10-year JGB yield target at 0%, with 1% as a reference gap. Governor Ueda repeated once again that they won't hesitate to take easy measures if needed, and that they are not foreseeing for sustainable price increases unless wage growth picks up. The latest Japanese CPI showed that inflationary pressures are easing, although they remain well above the BOJ 2% target. The latest unemployment rate remained unchanged at near cycle lows. The Japanese manufacturing PMI fell further into contraction, but the services PMI ticked higher, remaining in expansion. The latest Japanese wage data missed expectations by a big margin, and as a reminder, the BOJ is focusing on wage growth to decide whether to tweak its monetary policy. The Tokyo CPI, which is seen as a leading indicator for national CPI, eased further, but the core measure remains stuck at cycle highs. The market expects the BOJ to hike in April. Now, on the daily chart, we can see that USDJPY is approaching again the resistance zone around the 146.60 level, where we can also find the 50% Fibonacci retracement level for confluence. This is where we can expect the sellers to step in again with a defined risk above the resistance to position for a drop into new lows. The buyers, on the other hand, will want to see the price breaking higher to invalidate the bearish setup and position for a rally into the 150 handle. On the 1 hour chart, on the 4 hour chart, we can see that the price is forming what looks like a rising wedge here, right into the resistance. This is a reversal pattern and should give the sellers even more conviction for a downside move. Moreover, we can notice that the price is diverging with the MACD, which is generally a sign of weakening momentum, often followed by pullbacks or reversals. In this case, we should see at least a pullback into the lower bound of the wedge. On the 1 hour chart, we can see that we have another minor upward trend line here, defining the uptrend on this time frame. The buyers might lean on this trend line, where they will also find the 21 moving average for confluence. If the price were to break lower, the sellers will likely buy in to position for a drop into the lower bound of the wedge, expecting a breakout. Today, all eyes will be on Fed's Waller, as the market will be eager to see if he decides to push back against the aggressive rate cuts expectations. Tomorrow, we will get the US retail sales report, while on Thursday, we will see the latest US jobless claims figures. Finally, on Friday, we conclude the week with the Japanese CPI and the University of Michigan Consumer Sentiment Survey.